Well, we're expecting something with a 4 handle, which is a nice big number, and 4.
Could you ever have conceived that a year and a half ago, 2 years ago?
I absolutely could have, because the quarterly numbers are pretty volatile, and we've really juiced the economy with fiscal policy. So the underlying trend has already been moderate. Build in some fiscal oomph on top of that, and you've got some real momentum here. The job market obviously closing in on full employment. So we see a 4 handle, maybe 4.5 is the estimate I'm hearing most commonly. Just for the record, because tomorrow there are going to be people saying this has never happened before. It's happened before. We had a couple of quarters, 2014, where we had about 4.5, 5, two quarters in a row. I think the real way to understand the underlying trend in GDP is to look at the year-over-year number. I think that's going to be around 3%, which is still a very nice number.
Okay, but here's the question, Michael. Is it sustainable long term?
Well, I don't think quarterly annualized GDP growth rates of 4.2, 4.5% are sustainable. No. I mean, I think Jared has it basically right. You know, we see quarterly GDP spike from time to time. Even if you look at the underlying trend, this is still impressive. It is not all due to exports. There seems to be some, pretty solid underlying growth here that can't be explained by, one-off factors like exports or inventories or something like that. Some of this is the tax cut. Some of this is the increase in discretionary spending. And some of this is an underlying economy that's quite healthy at this point.
Well, let me ask a question about the tax cuts. Have all of that? Have we seen all of the impact yet?
No, the estimate would be something like adding about 0.5 point to GDP growth this year and next year. Now, after that, some of the fiscal impulse goes the other way. It sort of starts to fade a bit. And there, the expectation is for GDP growth to come down a bit. But this year and next year, you can count on the tax cuts and the discretionary spending Michael mentioned to add somewhere north of 0.5 point to GDP growth.
And I guess, Michael, we now are left with the question of what could potentially change the story a little bit, right? We came into this year thinking, wow, the main risk in the economy might be that it's going to be too hot. And then you had the trade concerns, interest rates went up a little bit. So what are you looking for out there, whether it's a change in fiscal policy, the Fed, anything like that, that might act as a headwind?
Well, I mean, I think there are a number of headwinds, and a lot of them are policy driven. We don't yet know how severe our tariff regime will be. If it becomes too severe, then I would expect to see the Fed try and counter that. We don't yet know, many things about economic policy. We don't know, so far it's been kind of confusing that businesses and financial markets don't seem to be reacting to some of this policy uncertainty and some of the policy that's actually been enacted, like the tariffs, for example. They don't seem to be excessively concerned about returning to very large budget deficits year after year. At some point, are investors going to decide that those things are troubling? I'm not sure. I've been puzzled by their behavior so far. So I think that there are headwinds in the future from President Trump's policy, potential headwinds from the Fed, potential headwinds from investors. And I think time will tell how those things will play out.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.